These numbers today are new numbers, but they're telling a story which is now pretty familiar to us.
And it's a complicated story.
Today's national accounts reflect an economy which is rebounding from the disruptions of the pandemic, but it's still being held back by capacity constraints, skill shortages and declining real wages. This is an economy which is growing, but the challenges are growing as well. It's a solid outcome, but it doesn't tell the full story about our economy.
Real GDP, that's economic growth, increased by 0.9% in the June quarter, slightly stronger than the March quarter, but still nowhere near the rates of growth seen even in the earlier stages of recovery from the pandemic. The full story of the economy the Treasurer refers to isn't just one about how the latest numbers are good, but that things have got a lot worse since. It's about some very weird patterns of activity in the economy. It's an unusual combination of rising inflation but falling wages, and households consuming and spending more, even as interest rates rise. These were the very sorts of trends that Reserve Bank Governor Phil Lowe alluded to yesterday when announcing yet another increase in interest rates. And outside the bank's headquarters in Sydney this afternoon, the human face of what those trends look like was on display, as early childhood educators protested over their low wages.
Over the last 10, 15 years or so, we have worked hard to keep wages low. Whether that's good or bad, yet to be seen. But wages have been the Achilles heel of the social economy.
Growth in the economy in the June quarter was boosted by strong earnings from Australia's resources exports, such as coal, gas and iron ore. But those soaring prices are also hitting household budgets.
There are essentially two economic universes at work here. The energy price hike globally, sparking of inflation, is feeding into pain for households through higher goods and services prices, energy prices and interest rates, but it is leading to a bit of a bonanza for the federal budget.
But these boosted export earnings have dropped off sharply since those June figures. The spot price of iron ore has slumped 19%.
The economy a few months ago looked strong with the headline numbers, but if you look underneath it, you can see signs of weakness. And the signs of weakness are the fact that growth is not widespread.
When it comes to the budget, the story is a bit similar to what's happening in the economy. We've got temporary factors which are boosting revenue in the short term, but other issues which are creating more substantial pressures that will be felt for far longer.
The federal treasury should be awash with revenue. The rest of the world is demanding Australia's goods and services. At the same time, lower unemployment means that we're not spending as much out of the federal budget as people might have expected.
That potentially gives the government a bit more space to manoeuvre in the budget. That is, all that extra revenue will mean the budget bottom line will have improved before the government even starts cutting spending. That, in turn, gives the government a little bit more room to deliver on some of its cost of living promises, such as childcare and cheaper pharmaceuticals. But the long-term pressures on the budget are immense, which might explain the continuing messages of austerity and hard decisions ahead from the Albanese government.
This budget situation is not going to be fixed in the short term. These are going to be decisions that we have to make in an ongoing sense across the forward estimates, because the budget's in such a difficult position, and all of the kind of challenges, aged care, increased defence spending, the NDIS, servicing the debt that we've inherited, these are all programs that are growing very fast, and we have to make room to manage them.
I see our task in the budget is not making the work of the Independent Reserve Bank harder.
That is, by not adding to inflationary pressures with too much budget spending.
I think the meaningful difference that governments can make is on the supply side. We've got these big supply side challenges. Our supply chains are bent and broken in many areas. We've got labour and skills shortages. This is all pushing up the cost of living.
There's a lot of call to use the budget for cost of living stimulus purposes. We've got to be really careful, because interest rates are going up to deal with inflation. So the Reserve Bank has its foot on the brake of the economy. What we want to ensure is that we're not at the same time putting our foot on the accelerator of the economy by putting a lot of stimulus out there from the budget. So this is the conundrum that the government faces. But what we will expect in the federal budget coming out in October is a better bottom line and the government fulfilling its election commitments.
And one of its biggest conundrums will be about how it helps these workers earn more and unleash the productivity gains they represent.